today. Now, to our first conversation on the show today, a report by Broll Property Services shows that the performance of key metrics in the office market segment in Nigeria, like the take-up, was at its lowest in over 5 years, while transaction volumes and sizes continue to decline. Meanwhile, the retail market is performing relatively well, but is still a shadow of its pre-2016 levels. And I have Amaka Ajaibu, she's a research manager at Broll Property. She joins me now as we look into this report. Thank you so much for your time on the show today, Amaka. Let's first start by looking at the lay of the land and understand how the economics of Nigeria currently is affecting the economy of Nigeria is affecting the property market in Nigeria.
Okay, thank you for having me. So yes, so like you introduced the highlights of the report. The office sector isn't doing so well, and the retail market isn't also doing well. And, this is heavily hedged on the impact of the COVID-19 crisis and its impact on economic conditions. So if we look at the office sector, for example, yes, the stats show that, the economy recovered in 2020 and we're looking at positive growth in 2021. However, the real estate sector lags the wider economy, and we're seeing that in the office sector, we're not seeing as much activity. A lot of tenants, a lot of occupiers are, just managing their existing business strategies. Yes, the stats say the economy is doing well, but in reality, a lot of these companies are struggling, and that's affecting their demand for office space. If we look at the retail sector, where we see a more direct impact via inflation, for example. So that has impacted a lot of purchasing power and consumer behavior. So we are seeing that, a lot of these retailers are just having to be creative about how they reach their consumers, creative about how they put out their products, their operational models, and all of that, just to remain resilient in this current market.
But still looking at the office market, quite an interesting line I read from your report, talking about having a shift in the traditional drivers of demand. What's playing out here?
Yes, so typically in the past 2, 3, 4 years, we've seen that the oil and gas and tech sectors have been major drivers for demand in this market. But if we look at the numbers and buildings that we track here at Broll, we see that has shifted. So there was limited contribution from those industries, and we're seeing more contribution from professional services, finance, and even co-working. However, if you're looking at the magnitude of these transactions, they are a shadow of what they used to be prior to the COVID-19 crisis.
All right, then, because when you look at it also, it's quite an interesting pipeline when you talk about the projects that are coming on board, especially when you look at what's playing out in the Victoria Island axis and Ikoyi. But I'd like you to speak to, what you expect from this pipeline and also the expected impact you think it will have on the office space.
Yes, so currently we have the supply growth. So we are seeing that there's an oversupply of premium grade, good quality office buildings in the market, especially in Bia and Ikoyi. So what this existing pipeline of, about 100,000 square meters, which is 20% of the existing stock, what it's going to do is going to put more pressure on the existing supply that has been vacant. So you see that there's a lot of vacancies, mainly even in VI, but then with the pipeline coming on, we're going to see even more vacancies in Ikoyi as well, because there's just the demand strength is not strong enough to support the supply coming on. So that also translates into the impact on rental levels as well and asset valuation. So a lot of stakeholders are watching this because of the magnitude effect it will have on existing fundamentals in the market.
Yeah, talking about fundamentals, I'm trying to understand that for the retail space as well. When you look at it, what are the key metrics saying?
Yeah, so retail market is very resilient. It's going against all sense of reasoning. They're saying that vacancy levels are at 8% nationwide. Foot traffic is going up. More retailers are looking to take up spaces, especially in very good performing malls across the country. So we're seeing more optimism in the retail sector. However, it's worlds away from what it was prior to the 2016 recession. So the market has actually been struggling significantly since 2016. Yes, you're seeing a little bit of optimism. Foot traffic is up. You're seeing collection rates are high. However, the market is still not what it used to be prior to 2016.
Yeah, it's also good to hear news about Seku Mall coming back on board here. And I'm also looking at the supply side for the retail space. I'm trying to understand what we can expect here.
Yeah, so a lot of institutional investment in that sector has kind of slowed down. I mean, I don't know if you remember the Africa Rising rhetoric that was going up in the early 2000s and early 2010. That was really supported by, a youthful population, so, I mean, it's just a lot of consumers and lots of retailers, and they will need a lot of retail space. So there was a lot of institutional investment in that sector. However, with the 2016 recession and, some very significant and notable exits from the markets, e.g. ShopRite, for example, a lot of investors are a bit wary about, doing these kinds of investments, like you said, Circle Mall or even Ikeja City Mall or the Palms. We're seeing smaller developments coming on board, very, very different from the traditional malls you see, smaller footprints, just the supermarkets, maybe the pharmacy and 2 other retail shops. So very small footprint we're seeing in the markets, very neighborhood type malls and plazas that you will see, in like Lekki and other neighborhoods. So yes, that's what we're seeing in terms of the pipeline. It's not the traditional pipeline that we were used to in this market.
Because when you look at this, I'm trying to understand also from the occupiers' perspective as well, because to understand the level of leasing activity that we're also seeing play out.
Yes. So, this latter part of 2021 was very good for leasing. About 1,000 square meters was leased in that period from different retail categories of fashion, food and beverage, and so on and so forth. So leasing activity is great. Even renewals as well. So existing tenants whose leases have expired and looking to renew, we're seeing very good renewal rates. This wasn't the case in 2020, obviously, when we got hit by the pandemic and, everyone was worried and didn't really know how to, go on. And then retail was significantly hit because of the impact on trading activities and restrictions to mobility. So, but now we're seeing a little bit of stabilization, and we're seeing more retailers looking to, come into very good malls and just take advantage of, all the benefits that's come with being in a mall.
But in terms of pipeline, is there any exciting projects to expect?
So in the office space, there are lots of exciting projects. I mean, if you go on the Alfred Romani stretch, you can already see a lot of them, coming up. And then in the retail space, we're seeing a lot of interesting, different formats, especially in the East. We're seeing, like I said, smaller footprints. So you just have your supermarkets, 2 or 3 retail shops, and these projects are doing really well. So I'm very excited to see, how they take off in other locations like Lagos and Abuja. But for now, the pipeline projects are a bit different from what we were.
All right, then, thank you so much for that breakdown there. Amaka Ajegbu, research manager at Broll Property, they're giving us a sense of the office and retail market here in Nigeria. We'll bring you more conversations after this short break on Closing Bell West Africa.
Broll, progressive property people.